What is going on, investors? Hopefully you guys are doing well out there. Earnings season moving right along, and today we got a big one. We got Visa Incorporated, ticker symbol V, over $550 billion payment processor. Year-to-date, shares are up about 5%. Over the last year, shares of Visa up about 17%. We are seeing in the after hours after the company reported their Q2 earnings, shares are reacting positively to the news, not only of the second quarter, but we also got third quarter guidance as well from Visa. Point all of that out, and we'll go through the balance sheet, the cash flows, and the operating statement, so you know what's going on with Visa. Now, those Q2 numbers came in $8.8 billion on that revenue side. That was for 10% growth year over year, beat expectations by about $180 million. And you see here, Wall Street was expecting a number maybe closer to 8.6 billion, or just under 10% growth. Now, that was the Q2. All important Q3 guidance comes in. You have to go digging for it with Visa. It's on the presentation of their financials. They say your net revenue growth for Q3 is going to come in at the low double-digit mark. And that's more or less where Wall Street had this one pegged, looking for close to maybe $9 billion worth of revenue, close to 11% growth. So certainly year over year, sequentially, we're seeing growth again in that low double-digit range. Now, for the full year, you're looking at low double-digit revenue growth on the top line. On the operating expenses, going to grow low double digits. This is not going to be one of those like exponential stocks that just surprises you in one quarter. In fact, if it does surprise you, it tends to be to the downside, as it tends to be rather predictable in terms of their payment volume. Now, speaking of payment volume, you see really across the board up 8%. You see that cross-border stuff. I mean, travel is back, business travel is back to a certain degree, and certainly Visa is benefiting from that. Now, from the balance sheet perspective, you got $13 billion worth of cash here. It is balanced off by about $20.6 billion in debt. Although when we go through the operating statement, more importantly, the cash flow statement, you're going to see you're not going to really be overly concerned. Here's your $8.8 billion worth of revenue. Again, that was for 10% growth year over year on that top side. You see two areas of increases on the operating expenses, primarily general and administrative, went from 282 all the way up to 452, and you had litigation. So the company settled a lawsuit, I believe, capping interchange fees until 2030. That's part of this litigation expense coming in at 430. You minus that out, since that's probably not necessarily something that is going to recur. You had operating expenses right in that $300 million. Again, up decently from the 2.7 where they were a year ago. So your operating income year over year, basically flat. I mean, more or less a rounding error. Again, you take out the one-time charge or maybe the single or two-quarter charge of the litigation, and your operating income ticks up just a little bit more. Now, you come down here to cash flows, paints an identical story. Pull down a net income number that's slightly better. Again, this is for 6 months cash flow, not just the most recent quarter. But you see, year over year, you went from $8 billion last year up to just fractionally to $8.2 billion. Not that we're really complaining about that, but again, this isn't like Nvidia or Microsoft that's just going to show up with a bunch of revenue and cash flow in a quarter. It's obviously a really, really, really steady business. Good news is they don't have a lot to invest in. Purchase of property, plant, and equipment, just negligible, about $550 million. They made an acquisition at about $1 billion. They swapped some treasuries and maturities and things like that. They end up burning through just $3 billion of this $8 billion. So you got a lot to play with. So what they do is they're buying back that Class A shares to the tune of $6.4 billion. I think they had a $280 average price. So these companies are better at running their business than buying back the shares at the lowest price possible. But you are seeing them continuing to buy back. Last year, they bought back $5.3 billion. They continue to not only pay the dividend, but increase it year over year. You see, it went from 1.9 on the dividend up to 2.1. So you continue to hold this one for those buybacks. And I know the yield is just 0.76%. That's for anybody that is bought in today. If you've held Visa for any length of time, you have capitalized on the capital return and also the dividend growth, which I'll show you here. Dividend was initially initiated back in 2008, and you just see steadily over time it's just increasing by 18, 19, 20% year over year. So the longer you hold it, the more you reinvest those dividends. You're not only getting that capital appreciation, but that dividend growth as well. So your realized or your net realized yield is a lot higher on this one if you've held it for any length of time. Now we come over here to the stock chart. It's looking pretty good. Now we were in a downward channel for a while, like a lot of stocks, peaked out in 2021, bottomed in October of 2022. Once you made that confirmation of a reversal, and you might own some stocks that where the stock chart looks like this. Tesla, which we'll look at later today, their shorter term stock chart looks exactly like this. What you're looking for is exactly what Visa did. You're looking for a breakout, and we'll put this maybe in purple so you can see a little bit better. Looking for a breakout above this trend, showing you that, hey, we have some buyers of the stock at a higher price. Typically what happens, you can buy it on that breakout, no big deal. Typically though, you have a back test back to the previous trend. That's an excellent spot to buy shares. We're seeing a lot of stocks or a couple of stocks at the current moment that are having this setup. If you see this setup, I don't mind stepping in at that area because as you've seen, ever since that breakout and back test, I mean, it's been straight up with Visa. Now, we're moving back to the top of the channel. This wouldn't be where I'm really excited about loading up or acquiring shares of Visa, but it's such a strong company. I wouldn't blame anybody for maybe inching into this one. Instead of maybe buying 10 shares at this area, maybe you do 3 or 4 and you look for maybe something that has a little bit more positive upside, at least in the shorter term. And then when Visa comes back down here, retest towards the bottom of the channel, that's where you can maybe allocate your full allocation. That'd be my recommendation with Visa. This is a beautiful, quintessential buy and hold stock. Collect that dividend, get that dividend growth, get that buyback. This company has a gigantic moat around their business. Virtually just 2 competitors, maybe 3 out there in the marketplace. It doesn't get much better than Visa. Guys, hopefully you enjoyed today's video. We'll be back again later today with Tesla after the conference call. Until then, good luck with your investments.